Alright, guys, I think this is it. Here we go. Alright. Here we go. We are live. It's your cousin Dustin. We are going to look at the markets today, guys. If you're new here, check me out every Monday, Wednesday, and Friday about this time, 3:30 to about 5 or so. 4:30, 5 o'clock, something like that. Today, we'll probably go to about 4:30, actually. We got to cut it a little short, but that's still pretty good. Let's get into the markets, guys. I'm feeling hyped. I'm feeling live. I'm feeling jazzed. I don't know about you guys. So the big, like, Mag 7s and stuff continue to get hit. Continue to take licks. Amazon's down 0.76%. Nvidia is down 2.78%. Apple is down 2.23%. Google is down 1.32%. Meta is down to 640. Down 1.5% today. Down to 640. My goodness. And then we've got a lot of green as well. Disney up 2.61%. My goodness. Robinhood is up 6.36% today at $75.66. Very cool. Looking at the broader indices here. We got the Dow Jones down 0.16% at 49,374. Guys, the Dow Jones is not above 50,000 anymore. We can't, we can complain now. S&P 500 is down 1.8%. It's not above 50,000, I mean. You know what I'm talking about. You get it, you get it. NASDAQ is down 0.43%. Here's what we're going to look at. The VIX right now. The VIX is up 1.97% today. And it's there we go. Look at Bitcoin. Bitcoin's at $68,841.29, up 3.97%. guess. Give me just a moment. I don't think anybody's watching this anyway, so I'm gonna pull it up on my phone. Pull this up on my phone. There it is. Alright, easy does it. Easy as that, huh? Look at the cryptos here. Dang. There we go. That'll get me together. Alright. Warden is up 3.41% today. Lego in the past hour. Check that out. So we got some motion. Lego in the past hour is up 29.02%. And in the past 24 hours, it's up 351.37%. Ain't that crazy? These cryptos, man. Weird, wacky stuff. Lego, INU. Huh. Who would have known? Guys, this is not financial advice. My goodness. Please don't let me show you Lego and then go and think that's something you should do. Somebody's doing it though. Power Protocol is down 34.89% on the 24 hours. But it's up 4.28% in the past hour. Today's Friday, February the 13th. I'm gonna find a good article. Check out the Qs. Sitting at 600. Up 0.02% on the day. Alright. So here goes the Qs. On the 1-day chart, they're up 0.02% to $675. On the 5-day chart, they're up. No, on a 5-day chart, they're down 1.14%. On a 1-month chart, they're down 4.09%. On a 6-month chart, they're up 3.5%. Year to date, they're down 2.23%. On a 1-year chart, they're up 12.08%. On a 5-year, they're up 78.51%. And there's the maximum chart, up 1,034.55%. The Qs. Okay. It's 3:54 in the afternoon, guys. We're going to have a look at Polymarket here. The Fed decision in March. Got a 1% chance of 50 basis points decrease. Can bet the next 5 minutes up or down on Bitcoin. Will Trump pardon Ghislaine Maxwell by the end of 2026? Look at this. Will Jesus return before 2027? My goodness. Keir Starmer out by March 31st or February 28th, you guys think? Well, U.S.-Iran nuclear deal will be struck before 2027. Will Jeffrey F. Epstein be confirmed to be alive before 2027? We got some bets going now, guys. We got some stuff happening. Okay, here's a straight up who's going to be the presidential election winner in 2028, J.D. Vance or Gavin Newsom? Let's look into this. I don't think it's going to be either one of those guys. I think it might be Marco Rubio. Or Donald Trump again. Oh my gosh. Oh my gosh. What are we going to do, guys? Dwayne "The Rock" Johnson, it could be. Elon Musk. He's not even illegally eligible to do it. Man. But yeah, there's a lot of fun choices here. We got J.D. Vance sitting at 25% chance. Gavin Newsom sitting at 18% chance. Marco Rubio sitting at 7%. Alexandria Ocasio-Cortez sitting at a 6% chance. Kamala Harris Who you guys think is hotter, Kamala Harris or Nancy Pelosi? Man. A lot of these, Mag 7s are weakening, waning. While you've got some of the more consumer style stocks increasing, becoming more powerful. Very interesting. We got silver sitting at $76.82. It's up $1.50. No, it's up 1.5%. It's down on the 5-day chart 5.6%. Down 11% over the last month. I feel like it's starting to solidify. Over the past 6 months, it's up 99.09%. Silver's up 8.85% over the past, year to date. Yeah, you can kind of see it on a 1-year chart here. Starting to solidify a little bit, in my personal opinion. What do I know? Don't listen to them. This is not financial advice. I'm just, we're just checking it out, seeing what it is, what we think it is. Starting to get almost to the point where I'm going to need a haircut, guys. I'll say, guys, anybody watching this, man. But, I'll tell you this. Yeah, I'll tell you this. The prophecy is being fulfilled. Alright? The planets are in motion. Okay? I posted a video and got like 10 views. I was getting like 0 views. So, as we move along, it's happening, guys. The vessel is here. The sacrifices are being made. The prophecy is being fulfilled. So, let's go. This should be a cool one. Maybe we'll dive into one of these stocks or something. Goldman flags 10 energy stocks poised to rally as the sector crushes the S&P 500 in 2026. Energy stocks, okay? That's according to Naomi Buchanan, Business Insider. Energy has been the best performing stock sector in 2026, and Goldman Sachs said it's identified 10 names that can keep delivering for investors. The energy sector, along with consumer staples and materials, have been a bright spot in 2026, while the S&P 500 hovers in the red. The sector's outperformance comes as oil prices rise and as investors embark on a market rotation away from high-flying tech shares. The energy sector has gained 20% since the start of 2026 compared to the S&P 500's basically flat performance year to date. Hey, don't do this. No. No. Forget it. Alright. Okay. Well, if that be the case, let's look up some stocks in the energy sector. Maybe Halliburton. Yeah, no, stop all that, bro. I wonder why it doesn't have data on the... Doesn't make any sense. Am I tripping? Am I doing something wrong here? Google Finance, they hate Halliburton, I guess. TradeView doesn't. They're cool with it. So let's do it. Why is Halliburton stock not appearing on Google Finance in a normal way? We're going to ask Gemini. Maybe there's something going on with it, like... maybe I'm just looking at the wrong shit here. That's what it is. Well, there you have it. User error. As usual. You can trust me to mess that up. Not really. I'll figure it out over time, guys. I don't ever look at Halliburton, bro. Come on, give me a break. I don't really think about energy stocks all that much, but, you know, I think they're important. Important to understand them. Some of the headlines. We think you can look beyond Halliburton's lackluster earnings. I don't know about that. Halliburton Company appoints Timothy A. Leach to audit committee. Cost cuts power Halliburton's big run. Halliburton and its rivals can't wait to get back into Venezuela. Alright. Here's what we'll do. We'll read off Halliburton's chart. And then we'll compare it to another couple stocks or something. Halliburton's sitting at $33.96. On a one-day chart, it's down 0.96%. On a 5-day chart, it's down 2.93%. On a 1-month chart, it's up 4.14%. On a 6-month chart, it's up 60.19%. On year to date, it's up 20.17%. On a 1-year chart, it's up 29.22%. Over the past 5 years, Halliburton is up 68.37%. And max all time, it's up 532.4%. Let's read some of its stats. It pays a 2% dividend of 17 cents a share. It has a PE ratio of 22.58, a 52-week high of 35.55, a 52-week low of 18.72, EPS of $1.50 a share. So it's sitting pretty close to its 52-week high there. Let's just compare it to ExxonMobil. That's another gas stock, I believe. So we've got Halliburton here in the blue, and we've got ExxonMobil in the yellow. So over the past 1 month, it's been outperformed by ExxonMobil, but over the past 6 months, it has outperformed ExxonMobil. Year to date, comparable, similar. 1 year, similar as well. So you can see that oil Look at ExxonMobil though on a 5-year chart. Starting to hit that stride there maybe. But, you know, this stuff is cyclical, like we say. Or like some people say. Alright. Okay. Let's have a look at ExxonMobil here. They last reported earnings on January 30th, 2026. And they beat by 2 cents. They missed on revenue by about 1.62 billion dollars. Interesting. Alright, so ExxonMobil on a 1-day chart is down 0.99%. On a 5-day chart, it's down 0.55 or 54%, sitting currently at $148.45. On a 1-month chart, it's up 17.31%. On a 6-month chart, it's up 37.96%. Year to date, it's up 23.36%. On a 1-year chart, it's up 37.29%. On a 5-year chart, it's up 193.84%. And on a maximum chart, it's up 2,190.90%. ExxonMobil. Okay, they pay a 2.78% dividend right now of $1.03 a share. 52-week high of $156.93. 52-week low of $97.80. EPS of $6.70. PE ratio of 22.16. Whoa. So, in my opinion, just judging from these stats in the charts, looks like Exxon here is kind of the grower and the steady mover. Out of Halliburton and Exxon. Let's do one more. Maybe Chevron. Okay, this has been kind of fun. Checking out the gas stocks. Checking out the gas stocks. Pretty fun. Alright. So today, Chevron, right here at 4:17 p.m. on January 2nd. No, February 2nd. Right here on February 2nd. No, February 13th. My God, guys. Getting excited. Too excited about Chevron stock. I'm too excited about Chevron. I am, though. Okay, here we go. Right here on February 13th, 2026, Chevron is sitting at $183.44. It's up 0.78% on the day. On a 5-day chart, it's up 1.56%. On a 1-month chart, it's up 12.13%. On a 6-month chart, it's up 17.88%. Year to date, it's up 20.56%. On a 1-year chart, it's up 17.87%. And on a 5-year chart, it's up 98.53%. Maximum chart, it's up 1,955.26%. It pays a 3.88% dividend, a quart of $1.78. A PE ratio of 27.82. 27.72. 52-week high of 186.52. A 52-week low of $132.04. EPS of $6.63. Check this out. Out of Chevron, ExxonMobil, and Halliburton, who has the safest dividend? What the heck are we doing? This ain't even. This is some kind of search crap. Come on, man. Give me the good stuff. How do you spell ExxonMobil? We're just gonna ask our friend Gemini here. Out of the three, who has the safest dividend? It should be able to answer that pretty concisely. Yeah. Try it again, Buster. Alright. This should give us something. When looking at dividend safety, you're comparing two big oil titans against one of the world's largest oil field service providers. I like a good dividend. I like that. I think that's cool. In terms of pure safety and reliability, ExxonMobil, and Chevron are in a different league than Halliburton. Between the three, ExxonMobil generally holds the title for the safest dividend due to its fortress balance sheet and conservative payout ratio. And it's in the middle of the highest as well. So it got a 43-year growth streak. So Halliburton's the lowest, Chevron's the highest, ExxonMobil is the middle. Exxon's between 2.7 and 2.9%. Chevron's between 3.8 and 3.9%. Halliburton is between 1.9 and 2.0%. ExxonMobil has grown for over 43 years. Chevron about 38 years. Halliburton has had a recent reset, so it's only been growing for 1 or 2 years. As far as their payout ratio goes, ExxonMobil's at about 60%. Chevron pays about 95 to over 100%. Halliburton pays about 45%. The credit rating, AA minus, very strong. Chevron's AA minus, very strong. BB plus, investment grade. Okay. Oops. The gold standard. Exxon is widely considered the safest pick. The aristocrat status, they have the longest track record of the three, increasing dividends for over 40 consecutive years. Balance sheet, they maintain extremely low debt levels, giving them a cushion to pay dividends even if oil prices crash temporarily. Diversification. Because they are integrated, they own the wells and the refineries. They can make money in the refineries when oil prices are low, which protects the dividend. Number 2, the high yielder, Chevron. Chevron is a very close second and offers a significantly higher yield than Exxon. Reliability. Like Exxon, they have never cut their dividend during modern oil crashes, 2014 or 2020. Cash flow. While their current payout ratio looks high on paper, due to recent merger activity, their break-even price for oil is among the lowest in the industry, meaning they remain profitable even at lower prices. Cool. The different model. Halliburton. Halliburton is less safe for a long-term income investor compared to the other two. Service volatility. As a service company, they are the first to feel the pain when oil companies cut spending. History. Halliburton significantly cut its dividend in 2020 by 75% while they have been raising it aggressively lately. While they have been raising it aggressively lately, they lack the multi-decade sacred dividend culture that Exxon and Chevron possess. You are getting paid less to take on more volatility. It's not good. The verdict. For maximum safety, go with ExxonMobil. It has the most robust financial structure and the longest history for protecting the check. For safety, income plus income, Chevron is the winner. You get a much higher yield, nearly 4%, with a safety profile that is almost equal to Exxon's. Avoid for dividends, Halliburton is a great company for betting on oil industry growth, but it is not a safe dividend play compared to the integrated majors. Okay. What is the name of that stock that went crazy a few years back? Nordic. Yep. There it is. Nordic American Tankers. And look at what it's doing. Look at where it's at. Alright, here we go. Nordic American Tankers. LTD. It's sitting at $4.54 cents a share right now, up 1.68% on the day. Over the past 5 days, it's up 7.58%. Over the past month, it's up 11.82%. Over the past 6 months, it is up 58.74%. Year to date, it's up 31.98%. Over the past year, it's up 70.04%. Over the past 5 years, it's up 23.37%. So this thing is choppy. It goes up and down. And over the maximum chart, look at that. Not good. Crazy. So here we go. They pay a dividend of 7.93%, a quarterly dividend of 9 cents. A PE ratio of 506.13. My God, look at this thing. 52-week high of $4.57. A 52-week low of $2.13. With an EPS of 1 cent. That was just kind of a silly one, guys. So you can trade like corn as well. What's something else? Lumber, maybe? Yeah, Lumberwoo. I would be totally bullshitting the line if I said I knew much about stuff like this, but I'm you know, it's interesting to see and think about over as far as like understanding the broader markets and stuff like that. Like, look how choppy and up and down this lumber price is. So nearly every year it chops up and down, up and down, up and down like that. Mm. Steel, maybe? Steel woo? No. Copper? Pretty crazy stuff. Where's the copper's chart? Copper's sitting at $5.78. Over one day, it's down 0.03%. Over the past 5 days, it's down 1.88%. Over the past month, it's down 3.92%. Over the past 6 months, it's up 26.84%. Year to date, copper is up 1.83%. Over the past year, it's up 19.75%. Over the past 5 years, it's up 52.61%. And over the past, the maximum chart, it is up 48.69%. I don't know. Kind of neat. Let's read this article if they'll let me. Wall Street steadies after its AI-induced sell-off. U.S. stocks steadied after an encouraging update on inflation helped calm a Wall Street that's been racked by worries about how AI may upend the business world. By Stan Cho, of AP Business writer. You can listen to the article. U.S. stocks steadied on Friday after an encouraging update on inflation helped calm a Wall Street that's been racked by worries about how artificial intelligence may upend the business world. The S&P 500 barely budged a day after it had tumbled to one of its worst losses since Thanksgiving. The Dow Jones Industrial Average rose 48 points, or 0.1% on the Nasdaq Composite, and the Nasdaq Composite slipped 0.2%. Stocks got some help from easing Treasury yields, which fell after a report showed inflation slowed last month by more than economists expected. U.S. consumers paid prices for groceries, clothes, and other costs of living that were 2.4% higher overall than the earlier year. Yep. Sounds about right. While that's higher than anyone would like and above the 2% target set by the Federal Reserve, it wasn't as bad as December's 2.7% rate. and an underlying measure of inflation that economists see as a better predictor of where it may be heading, slowed to the least painful level in nearly 5 years. It's still too high, but only for now, not forever, said Brian Jacobson, Chief Economic Strategist at Annex Wealth Management. Besides helping U.S. households struggling to keep up with the cost of living, slower inflation could also give the Federal Reserve more leeway to cut interest rates if needed. The Fed has put its cuts to interest rates on hold, but the widespread expectation is that it will resume later this year. All right. Reducing rates would give the economy a boost and juice prices for stocks. What holds the Fed back from cuts is they can give inflation more fuel. That makes sense. In the meantime, the economy seems to be in a better place than at the end of 2025. Besides the slowdown in inflation, it also saw the job market improve last month by more than economists expected. On Wall Street, stock prices steadied for several companies that investors had earlier targeted as potential losers from AI distribution. AppLovin, for example, lost nearly a fifth of its value on Thursday, even though it reported a stronger profit than analysts expected. Investors have been worried that it and other software companies could see AI-powered competitors take away customers and fundamentally change their industries. On Friday, AppLovin climbed 6.4%. Trucking and freight companies also tumbled on Thursday after a small company, Algorithm Holdings, said its AI platform helps customers scale freight volumes by up to 400% without a corresponding increase in operational headcount. After seeking 14.5% Thursday, C.H. Robinson Worldwide rose 4.9% on Friday. Such drops have been rolling through the market recently, targeting industries that investors decide are under the threat for disruption by AI. The reactions have been so aggressive and so quick that analysts have likely likened it to a shoot first, ask questions later mindset. Applied Materials was the strongest single force, pushing upward on the S&P 500 after rising 8.1%. The company whose products help make chips and displays reported a stronger profit for the latest quarter than analysts expected. CEO Gary Dickerson credited acceleration of industry investments in AI computing. It's because y'all are giving us more money, bro. That's the way we're able to do this. Y'all keep giving us money, we'll keep taking your money. Y'all keep giving us money, we're going to keep increasing our revenue. By God. Back to the article. On the losing end of Wall Street was DraftKings, which dropped 13.5%, even though its profit for the latest quarter topped analyst expectations. It gave a forecast for revenue this year that fell short of expectations. DraftKings? Norwegian Cruise Line Holdings fell 7.6% after replacing its CEO just a few weeks before it will report its latest quarterly results. The cruise ship operator said John Chidsey, a director at the company who used to be CEO of Subway, is replacing Harry Summer, effective immediately. Throw him in there, huh? The heaviest weight on the market was Nvidia, which fell 2.2% because it's the largest stock on Wall Street. Its moves carry more weight on the S&P 500 than any other companies. All told, the S&P 500 added 3.41 points to 6,836.17 to close. But its worst week since November, the Dow Jones Industrial Average rose 48.95 to 49,500.93, and the Nasdaq Composite fell 50.48 to 22,546.67. In the bond market, the yield on the 10-year Treasury fell to 4.05% from 4.09% late Thursday. The yield on the 2-year Treasury, which more closely tracks expectations for Fed action, sank more. It dropped to 3.4% from 3.47%. In stock markets abroad, indices fell in Asia and were more mixed in Europe. Hong Kong's Hang Seng dropped 1.7%, and Japan's Nikkei 225 fell 1.2% for two of the bigger moves. Alright, good enough. That was a pretty cool article, I guess. Look at the heat map one more time. AMD's up 0.67%. Alright, so we've got Nvidia down 2.21%, Apple down 2.27%, Google down 1.06%, Meta down 1.55%, Microsoft down 1.13%, Tesla up 0.09%, Eli Lilly up 0.17%, Berkshire Hathaway down 0.49%. And before we go, I wanted to see this. What percentage of the stock market does Nvidia control? As of early 2026, Nvidia has become the most influential single company in the world's stock markets. Its control or weight varies depending on which part of the market you are looking at. This is what I want to know. The S&P 500, the U.S. market benchmark. Nvidia currently accounts for approximately 7.2 to 7.3% of the S&P 500 index. Why this matters? Because the S&P 500 is weighted by market cap. Nvidia has more influence on the index's movement than the bottom 100 companies combined. If Nvidia drops 5%, the entire S&P 500 feels a noticeable pull downward, ranking it as currently the number one largest company in the index, frequently swapping the top spot with Apple and Alphabet. The Nasdaq 100, tech heavy. In the tech-focused Nasdaq 100, Nvidia's influence is even greater, sitting at roughly 8 to 9%. This makes it one of the primary drivers of tech sentiment globally. Total U.S. stock market. When looking at the entire U.S. stock market, including thousands of small and medium companies and indices like the Russell 3000, NVIDIA represents about 4 to 5% of the total value. Its valuation hovers around $4.5 trillion to $4.6 trillion. To put that in perspective, NVIDIA's total value is now larger than the entire stock markets of many developed countries, including Germany and France. Not combined, separately, but still. The hidden control. Market impact. Beyond its mathematical weight, NVIDIA exerts psychological control over the market. The AI proxy. NVIDIA is viewed as the canary in the coal mine for the AI revolution. When NVIDIA reports earnings, it doesn't just move its own stock. It often moves the entire semiconductor sector and the Magnificent Seven, Microsoft, Amazon, Meta, etc. Portfolio dominance. Because almost every major mutual fund and ETF like SPY and VOO, SPY and VOO, I call them SPY and VOO, is required to hold NVIDIA to track the index. Your retirement account likely has more exposure to NVIDIA than any other single company. You better go buy some chips. So here's a little graphic here. S&P 500, it's about 7.3%. NASDAQ 100, it's about 8.5%. Total U.S. market is about 4.5%. Global AI chip market, it's about 85 to 90%. Wow. That's pretty crazy, huh? So we got Bitcoin sitting at 68,862. It's up 4.8% in the last 24 hours. Ethereum is at 2,051.73.86. It's up 6.79% in the last 24 hours. XRP is up 4.5% in the past 24 hours to $1.40. Warden, we talked about Warden the other day. It's down 11% in the last 24 hours. Why is Bitcoin up today? This is according to CoinMarketCap's little AI thing here. We're just going to read the top 3 headlines here. Bitcoin is up 5.15% to $68,915.86 in 24 hours, outperforming a broader market rally primarily driven by a softer than expected U.S. inflation report. It shows a strong correlation, 83% with gold and 64% with the S&P 500, indicating a shared macro-driven move. Primary reason: softer U.S. CPI data boosted risk sentiment, triggering a broad crypto rally. I don't know if I'd call this a rally. Secondary reasons: a surge in derivatives open interest and short liquidations amplified the upward move. Near-term market outlook: if BTC holds above 68,000, a test of 70,000 resistance is likely. A break below 65,000 risks a retest of lower support. Watch for shifts in ETF flows as a key trigger. Alright, guys, I think that's going to do it for today. Covered some pretty cool stuff. Covered the broader markets, the cryptos, some fun betting stuff. Pretty cool, pretty productive. Holla at your boy. If you watch this, like and subscribe. Like and subscribe. Now they're gonna get me with the ads. Let's get off here, guys, before they catch me, before they make me do it. The prophecy is being